Hello traders everywhere, Adam Hewison here with your midday market report for Tuesday the 6th of August. Is this the top of the market or is it just a pause before we move to new highs? That's the question everyone's asking today. The reality is this is a setback, and that's a healthy thing in any market. In fact, let's take a look at some of our trade triangles in our recent trade triangle history. This is today. So we've scanned for equity, we've looked for volume greater than 2 million, and these are weekly trade triangles. Now remember, we use the weekly for timing and the monthly for trend. Now looking at this, you can see that the monthly trend, which is the M on the far right hand side right here, is red. All of these middle triangles, the weekly trend triangles with the yellow boxes around, means these are just lows that have happened today. And a red weekly triangle 1667, that's where the market is right now, indicating that the trend is resuming down. So these are all in downtrends. As we scope this down further, you can see this goes on for quite a while. Now here's two trade triangles, weeklies, are indicating to cover short positions. And that's covering a green weekly at 3165. And that's currently trading 3170 right now. So that's an indication that the trend, a counter trend rally is taking place, and how far that rally can take place we don't know yet, but it's certainly giving you a warning to cover your short position. Now conversely, when we see a green trade triangle here on the monthly, let's scope this down a little further, you can see there's quite a few of them, and then when we have a red one on a weekly, a red and with a yellow box around it, means that's just happening today, and it's indicating to exit that position. Now this red exit weekly was at 30.81 on this particular stock. The market's 30.87. So no big deal, but the reality is it's saying a warning signal to get out. So that's how we use our trade triangle technology for timing. Monthly for getting in initially, and the weeklies for exit and entry signals. Pretty simple. So let's go to our portfolio, take a look what's going on. Now you can see we have a red daily here, which is not that important for the Dow. The monthly and the weekly is still green, as are the weekly and the monthly for both the NASDAQ and the S&P 500. Now gold is under a little bit of pressure today. We'll be talking about that. But Apple's still very positive. We talked about that. And also the euro is strong today. So let's go to the markets and start with the Dow. And this is a daily chart. It's a 1 year view. I'm going to scope this into 3 months to give us a closer picture. But you can see even today's pullback really didn't change anything. In terms of our line in the sand where we're really going to be taking positions off, that's going to be right around the 15.4 level, which is right here. If the Dow was to come down like this, say like this, then we'd want to exit our weekly position right here and be on the sidelines. But right now, we are bullish, and we think this is just a natural pullback that we're seeing in the market. We're at plus 75, so the market's resting. A little bit of concern has to be with the MACD, which is turning down. It's weakening a little bit, but nonetheless, our trade triangles are still positive. We're going to go with those. So looking at the S&P 500, it's pretty much the same picture there, but the trend is clearly on the positive side. We go to plus 90 there, so it means the Dow is a little bit weaker than the S&P 500. So let's stay with our trends. They're all positive, and we expect this trend to resume and move to new highs. Now, one strong market has to be the NASDAQ, which has really sort of outperformed everything else so far. Now, we have a plus 90 on that, meaning the trend is clearly on the upside and looks like it wants to go higher. So this little pullback is nothing more than that in our opinion, and we expect to see this market resume later this week. So let's go to our next market. Crude oil, pretty much the same picture there. We've had a little bit of a rally. We're in a 55 range. Now with crude oil, we use the daily as timing. Now the daily on the timing, 105.70 was an exit on that position. It's 105.44 right now, so we're on the sidelines. But longer term, we still think this market can go high. Now, what is of concern right now has to be the recent highs we see right here around the 109 area. So we need to get over that, and also this is the downside where we have a potential area of support. Now, this would be a pivot point, of course, if it were to go through there, and I'm not sure it is. So this is the pivot point, and these are potentially a double top. If we go like this and then suddenly blast through here, then we're going to be heading to, I would think, about the 115 area. So that's still what we're looking for in terms of the trend as 115. Once we go through the highs here, I think we will go through the highs. Now we have a weekly and a monthly, but there's the monthly right here and the weekly right here, both very positive. We need to get the daily to turn green, and that will help us time our move back into this market on the long side. And this is gold. We've talked about gold. Remember, we talked about gold rolling. Let's scope this out to 6 months. We talked about gold rolling over like it's done so many times in the past, and it seems like that's the path it's taking. You can see here it sort of had the rally, rolled over, had the rally, rolled over, had the rally, rolled over. Now, whether or not we make new lows, that remains to be seen. I don't think we will. I think we're going to stick around this area, that maybe the 1250. I don't think we're going to go much lower than that. 1250 to 1200, I think that's where we're going to find support. But we are turning down on the MACD, which is definitely a situation where it's a little bit negative. And that's going to be the euro against the dollar. And you can see, really, if you look at this, you can see we have a pretty broad range, kind of like support down here, and then we sort of run into resistance right around here. So we're sort of at the high end of the range. But nonetheless, I think we're going to see this market at least go up and challenge the 134 level. We got very close about a week or so ago, but it's turned back down. But nonetheless, I think that we're still in this upward mode. All of our trade triangles, if we just look at those, still look very positive, a plus 90 reading. So we are definitely in the bullish camp on this particular market. So let's see how things play out. I'm Adam Hewison for Market Club. I'll be back tomorrow with a report. So thanks so much for stopping by, and every success in the market.
You can find Adam Hewison as a regular contributor on Bloomberg, Business News Network, CNBC, and Fox Business News.